In this module, I'm going to run through 10 things that winning spread bettors tend to get right and losing spread bettors tend to get wrong. As I go through them, I'll point out which ones we're going to tackle a little bit later on during the rest of the DVD. First of all, trade with an edge. Winners tend to have strategies that have a positive expectancy, i.e. over time will produce profits. These can be based on fundamental analysis or technical analysis. They can be trend following or counter trend. They can be discretionary or mechanical. Losers tend to have either no strategy at all or strategies which don't have a positive expectancy. The strategies in this DVD, if properly implemented, will produce a positive expectancy. Use methods that suit them. Winners tend to have strategies that match their objectives, risk preferences and lifestyle. They tend to invest quite a bit of time and money getting to that point. Losers don't think about that. We'll talk about this a bit more in the key concepts section, objectives and risk preferences. Understand the risks, rewards and odds of the strategies. Winners tend to know for each strategy they trade what the odds are of success, in particular the average win versus the average loss in terms of size and the percentage of winners. We'll discuss this a lot more when we go into the detail of the strategies. Monitor performance. Winners tend to track how each strategy they use is performing and also how they are operating it themselves. This involves keeping good detailed records. Focus on exits. I always maintain that the exit is much more important than the entry for any strategy, and winners tend to spend a lot of time designing appropriate exits. There are a whole range of techniques available here, including setting an initial stop loss, trailing stop losses, time exits and a range of other tools. And we'll discuss this in detail when we go through each of the strategies in this DVD. Manage bet size. Winners tend to keep their bets to an appropriate size for the strategy they're trading. Losers tend to bet way too much and quite often lose their whole account or more for that very reason. We'll discuss this further in the objectives and risk preferences section and also when we get into the details of the strategies. Have written plans. Winners tend to have documentation outlining the logic of every strategy they trade, plus the rules for entry, the rules for bet size and the rules for exits. In addition to that, a complete trading plan contains much more, as everyone will know who's read my books on this subject, and things that you might want to have in a business plan would include analysis of yourself, your strengths and weaknesses, the overall analysis of the markets that you're going to be trading for the next year, and contingency plans. Stay in tune with the markets. Winners tend to respect the overall direction of the markets they're trading. For instance, in a bear market, looking for bets to go short. I tend to focus in particular in the stock market on sectors, and I do an analysis every week at SPREADBETTINGCentral.co.uk of the sectors within the FTSE 350. Stay in control. Winners tend to plan the trade and trade the plan. Losers tend to have no plan at all, or if they do have a plan, not stick to it. Accept responsibility. Winners tend to accept that the results they get are down to them. Losers tend to look for external reasons for their poor performance.